just clicked onto the recording button right there. These webinar series are recorded, and I'll shall go and start. I think you've got my presentation slides right there that says FP Markets, and we can actually start. I'm just clicking onto that. Just give me a second. All right, I've just enlarged the presentation slides right there. Now, you are all at the right place if you are attending the webinar series, Building Your Resilience webinar series, and today's session is part 1 of a 4-part series. Okay, so just before we start, if you guys don't mind, I'm just gonna have that a second. The disclaimer read out, just a little excerpts of it at the very top and the bottom, and that's it. And we can then start on that. Just got a bit of a slow system going on at the moment. I'm not 100% sure of why that is, but I think I'll get going. And just to make it all clear for you guys as well, you guys are most welcome to ask questions at any time actually, but if you've got more questions that sort of follows through, it'd probably be best to have a Q&A session right at the very end. So it lasts for about 45 minutes, this whole session here, and then we've got about 15 minutes or so at the very end to answer your questions, and we can also discuss your current trades. Okay, so we are in part 1, and I'm just waiting for my presentation slide right there. I'm not sure why, but it's just a bit of a hiccup at the moment with the connection between the two computers or two screens that I have. But not to worry, I think it'll soon, very soon show itself right there. It's all black right now, but I think it's processing. Just give me a second, guys. Thank you for your patience. Just got more people coming into the room as well, so it's just about time for us to start, but we've got a build-up of people coming into the room as well, so hopefully it's just in time for us to start. Okay, I'm just going to make sure that I'm doing things right my end. Okay, there you go. It is part 1 of 4, so we'll be talking a lot about the P.R.I.C.E, P-R-I-C-E trade plan. So I want to talk a little bit about the P.R.I.C.E trade plan that I've devised and been using it for quite a number of years, close to about 6 years or so. And basically, it's a trade plan that I've got different techniques in every letter of the word. P-R-I-C-E, so E is your execution, and then we've got many P's under the word P itself, under the letter P itself, and we've got several techniques for trend analysis and various others. So I've just got a I think a simplistic trading procedure or standard operating procedure that you can actually follow, and we call it the P.R.I.C.E trade plan right there. Okay, so there we go. We're now on. So let's just start. Let's see whether I've got that right. Just a second. Just going to cancel that here. Okay, I've got the disclaimer up and running. So just a couple of lines at the very top and at the bottom as well. The information contained in this material is intended for general purpose only. Just give me a second. Just there we go. I hope it's not going to do that again. So let's just have our fingers crossed on that one. Just give me a second. I'm just sorting out all the different screens that I've got here. Right. Okay. I do apologize for that, guys. Just going to get this one right this time. So let's try again. Okay. All right. Hopefully it stays there and it goes to the next page in a bit. So the information contained in this material is intended for general advice only, does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure that accuracy of information as at the date of publication. Right at the very bottom here, FP Markets recommends that you seek independent advice. First, Prudential Markets Private Limited, trading as FP Markets. That's your ABN long number right there, as well as your Australian Financial Services license number right there. Okay, so that's basically it. So let's progress with that. Now, for those who are really new to FP Markets as well, FP Markets is an Essex regulated Australian global CFD and Forex provider, serving as one-stop destination for traders to access a full suite of trading products, including CFDs across equities, Forex, indices, commodities, futures, and Bitcoin. So as it stands now, we've got, if not more, it's at least 10,000 instruments that are tradable on FP Markets platforms. So we've got two major platforms. You've got the MT4 for the Forex side of trading, as well as the RIESS trading platform, mainly for stocks, CFDs, and all the other asset classes. Okay, so we've got true ECN spread type trading conditions starting from 0 pips. We've got multilingual support as well as the tradable products that I've mentioned earlier on. We've got 10 funding currencies as well, wide range of that, and we've got a flexible leverage sort of setup up to 500 to 1. Okay, we've got the Equinix NY for data centers as well as no recodes. Okay, so we've got all that up and running, going on for traders and clients of FP Markets, and be sure to have the best of services from FP Markets as well. Now, with that, I would like to proceed and go on to our FP webinar certification course series today, and you are at the first session or first part of a 4-part series. So this part series here is titled Building Your Trading Resilience series. Okay, so how I would be laying out this trading resilience series is by having 4 parts now, once a week basically, as what you're attending right now, and we're going through the whole trade plan as well, and some practical sort of approach to analyzing, researching the markets, and at the very end as well, I'll be sharing with you some strategies as well. So we want to take that to a level where we could apply at least 70% of what we learned and leave that 30% to be theory or knowledge, and then turn that information, at least about 70%, into practical trading skills that you can actually apply onto the markets. Okay, all right, let's just proceed right there. Okay, so I want to talk a little bit about starting off your whole analysis of the market, as well as researching the market, with something I call the P.R.I.C.E Trade Plan, P-R-I-C. It's really a sequence of steps that we can actually take, and in each sequence of steps, or the letter of the word price, we could find many techniques or approaches that are simplistic yet practical for us to get a better understanding of market trends or sentiments, or just for us to understand what we need to actually do with these kind of information in order for us to make a better financial decision, whether it is to enter the market for a buying position, selling position, or even to just hold and not actually participate in the market at that moment of time. But it is really essential for us to understand the type of information that can actually be used for our practical application, practical trading. Okay, so I just want to introduce you to the P.R.I.C.E Trade Plan. We've got a bit of a sequence right there. I guess you guys noticed that little word SOP, which stands for Standard Operating Procedure. So we would start off with the letter P, and P itself stands for many other P, but one of the major subject of the letter P right there is the psychology of the market. Now, it's easier said and mentioned than to apply it practically. So what about psychology of the market that we need to know, and what about psychology of the market that we can actually apply onto a real trading? So it all boils down to sentiments, feelings of the market, understanding whether or not it's a risk off, risk on, what is risk on, what is risk off, and how do we use certain tools that are available on FP Markets. We will cover that on the next series of webinar called Trading Edge, tools as well that are available on FP Markets trading platform. Really cool tools that we can actually use to sort of filter out the right information for us to make that trading decision. Okay, so with the psychology of the market section itself, we've got many other P's. like the picking the right pair for the day, that most of the beginners in the Forex world especially have got challenges or obstacles in doing just that, in picking the right pair. How do we actually know the right pairs for us to actually pick for the day? Or should we actually stick to just one pair, just one currency that we like, and stick to that pair like Euro USD for the whole trading time? And if we were to be trading for a year, should we actually then just stick to that one pair that we know about? Or should we actually use some correlation tools that are available in FP Markets platform as well to help us diversify? And as well as when we're diversifying, there may be actually ways to sort of cushion the risk as well, and also picking out pairs that are actually traded or created in terms of its trend by the bigger boys or events out there. So this is what we want to talk a little bit about, but it's probably best for us to dig into the practical, realistic scenario of trading and apply all these elements into it. So this is what we're going to be talking about in this whole series of webinars as well. Okay, so we've got a P right there, and then we've got R, stands for risk reward, and then we've got insights. I'll just explain a little bit more about how all these could actually work out to be a great trade plan, like sort of a checklist for you to understand what you would need to do from the first stages of researching the market first, and then analyzing, and then trading the markets. Okay, let's just move on that side of it, give you a little bit of a picture of what the P.R.I.C.E trade plan entails. So as I've mentioned earlier on, step one, you could have step one on the letter P itself, and then you progress. Step two, R, I, C, and then E is your last sort of step where you execute that trade. If at all, you've actually confirmed everything from step one right up to step four. So step one itself, as I've mentioned, you've got psychology of the market. You need to understand what the trend is, and we could get a better understanding of the trend if we understand whether or not the environment for the day is more of a risk off or a risk on type environment. Okay, so that itself could actually give you a better idea on where the market's focus is. Are the market, or is the market at the moment looking at safe havens, or has they is there a geopolitical risk involved? Are the events like Trump's tweets, for example, and then you've got current relationships between countries like the US with Russia, with Korea. We've got various other geopolitical type events that connected with the current agreement, trading agreements between countries, or even nuclear type topics that has actually recently came up as well. So these areas of interest by the media has got a lot to do with moving the markets for certain pairs, certain asset classes as well. And that does actually then create whether a risk off or a risk on environment for investors and traders. So when it does actually go into the pockets of investors, then it would be a bigger sort of impact in the market, because we're talking about bigger companies, investors, hedge fund companies that would either transfer these wealth to another asset class, or to actually pump in more money into that particular asset classes. So all these does actually then impact the flow of currencies, the flow of assets, which will then create the trends. Okay, so when trends are created, hence the reason we see all the movement of prices, and then it impacts volatility, liquidity as well in the market, and various other things. So just to keep it really short and simple as well, risk off is when investors and traders are actually switching off the switch of risk, their risk appetite. So they're becoming less risky in their choice of assets. So they would then pump in or transfer their wealth into safe havens. And safe havens could actually be currencies like the Swiss franc, for example, with the abbreviation CHF, and also your Japanese yen, for example, abbreviated as JPY, and also gold. And these are all safe havens that could actually be of interest when something is just not quite right in terms of events, risk events like geopolitics or even political events within a country, and then we can then see a flow of that asset classes going into the yen. Yen would actually probably, gone up in value or is going up in value, and then there are more forecasts of more interest in pumping up, their investments into gold or CHF. Let's say Swiss franc as well. So when that actually happens, then this is more a risk-off type environment. But when we see that we've got loads of movements in the US dollar, lots of buying going on, driven by lots of greed, of course, and not so much uncertainty or fear, for example. These are the three main emotions. The psychology of the market are driven by three major emotions or sentiments, we call it, and they are greed that drives the market upwards. Then you've got uncertainty, where markets or charts, for example, would go sideways, like a 3 o'clock type angle, for example. That would then spell out uncertainty or even holding on to the assets because the investors and traders are not really sure of which direction to push the market, either upwards or downwards. Okay, so we've got uncertainty there. And when we look at the angle of the chart going downwards towards the floor, for example, towards the 6 o'clock type angle, the steeper it is to the downside, the more the fear of traders and investors are driving the market downwards, or we call it bearish. Okay, so that's basically where we tie up our knowledge between psychology of the market, trends as well, sentiments, and where it would give us a better hint of whether or not it's a risk off or a risk on environment. So opposite of the risk off environment, where they would transfer their interest of asset classes into less risky assets like gold, the yen, the CHF, we've got risk on. Risk on is totally driven by more and more greed and more collecting of assets that may actually be not necessarily risky, but those assets that could be seen as giving out or perceived as giving out the best returns at that time. So we've got more people, more investors, traders driving the price up with the sentiments that are mostly communicated with greed and more gains that they want. Let's say the US dollar stocks and everything just rallies up, for example. That is a risk on environment where investors and traders are switching on their risk appetite for more risk. You see, so that's basically where we need to understand between the differences in the environment when risk off and risk on is concerned. Okay, so that's the P side of it. And with the with understanding the psychology of the market, we could find potential trade ideas, and potential trade ideas are usually it's gained from our understanding of the personality of pairs, like I've just mentioned earlier on, the risk off and risk on. They've got separate interest in different types of pairs and asset classes depending on the environment, and it is quite interesting to actually know there are various strategies out there. But I would like to share with you in our upcoming seminars, upcoming webinars, sorry, and with patterns, strategies, geometric patterns, and various others that we need to understand. Also, with the letter P itself, price action is of utmost importance. Hence the reason we need to know how to move between these steps in combination, in combining between technical and fundamental analysis. So hence the reason sometimes, is important for us to understand and also realize that a more balanced approach in analyzing the market gives you a better 360 type angle of approach, or a sort of knowledge-driven approach, where we would like to study a little bit more about what's going on from a big picture perspective, as opposed to just being caught to technical and more technicalities. For example, just technical analysis and all that. That would then encourage us to be heavily weighted to just one type approach, and that could actually be encouraging us to miss out on other relevant information from different perspectives of the market. Okay, so we've got all these little P's that are in the step one itself, which is really important. I think I've got some questions here. I do apologize if I missed out all these questions. Give me a second. Okay. Hi there, Tim. Okay. Yes, of course. All these webinars are all these series of webinars are recorded, so not to worry. We'll have that for the traders of FP market specifically. It's all been reserved in the archive, so it'll be sent to you upon request as well. So for those who would like these recordings, simply email it to support@fpmarkets.com, and my guess is the team there will be all ready and helpful to send you the recordings. Okay, all right, there we go. So we've got the letter P right there, and then we've also got the area of risk and reward. That's where the R, that's what the R stands for, risk reward, and it's got a lot of connection, in my opinion, to understanding your equity level, as well as you know, what sort of lot sizes that you would be deciding. How do you actually decide your lot sizes? That's really important, because on we go as traders and investors, where especially traders, beginners, newbies, where they could just get overly caught up with just analyzing the market. But it is really important for us to understand as well, in the process of analyzing the market. Let's say if we go onto the chart, and this is what I see most of the beginners do. They go straight onto the chart, and they go into a candlestick chart, let's say for Euro USD or any pairs that they have actually chosen by themselves, and go onto it, and then they zoom in really big, and then they look at the chart, and just based on a single candle, they tend to actually decide on the trend. So the trend itself is not decided on just a movement of a single candle. A single candle that goes really high, or a really long bullish candle, does not mean it's a bullish market. And this is where we've got all these little mistakes or approaches that needs to be tweaked first. It is really important for us to also understand the risk reward side of it. Need not be focused on just the reward side of it. It's probably best for us to pay more attention to the risk element of whether it's in the market through the charts, or even choosing the right equity level that is personal to yourself. That's really important in terms of lot sizes as well, because when it comes to risk reward, and especially risk, I find that most traders tend to find it a little challenging in believing or understanding that the time frame that you choose has got a lot to do with the equity level. So what I mean by that is, when we are actually, desperate in trade signals or trade ideas out there, what we need to realize is not all these signals based on the various time frames would actually fit us, depending on the level of equity that we have. So let's say if I were to release a trade signal, and I've got an analysis made up for, let's say, the AUD, the Aussie versus the dollar, and I find that I've got various trades set up, and I've got a trade idea saying that it's got a good bullish run, and we're expecting a good position to buy the AUD USD. But if I were to show you that trade signal on a screenshot, it could look really impressive as well, or it could even be a high probability type trade idea. But I've got it on a daily chart, and you've got you would like to follow that, but you are only starting with a small amount to test out Forex trading, for example, and you're just starting off with $100 or 200 US dollars or Australian dollars to start. That might not actually be matching up with the trade idea that I have actually sort of given. The reason for that is, if at all I was going through a correction on my chart, a 50 or 100 plus correction is quite normal and acceptable on a daily chart with an investor or trader that has a higher type capitalization level. But if you've got just $200, let's say, and just you riding on that corrective phase of a daily chart would easily wipe out your account. So hence the reason it's really important for us to understand that when we analyze the market or whatever we choose to do with Forex trading and trading in general, we need to first understand that whatever the approaches are out there, we need whatever that's out there to fit in with us and not the other way around. So we need to first understand the level of risk that we are willing to take, the capitalization level. So the lower the level of equity and capitalization, that would then help you decide to analyze shorter term time frame, shorter term trade ideas and opportunities, as opposed to looking into the long run, because that does then could actually help us cushion our risk a little bit more. So that is the one part that I find traders sort of not really familiar with, that area of matching your equity level with your trade setups on the right time frame. So to put it very simply, lower your equity, lower the time frame that you could have your trade set up on, and the higher the time frame, the higher the requirement of your liquidity level is. Okay, so I hope that actually makes sense, but don't worry about it. We've got various ways, and for me to guide you through in your on your trading sort of processes. So this is a mentorship type program. So in collaboration with FP Markets, we'll be happy to guide you through on how do you actually utilize all these information, and following a plan that we call it the P.R.I.C.E Trader Plan here, to give you a better idea in approaching the market, getting the right type information, as well as applying it practically onto your realistic trading conditions. Okay, so there you go. So you've got step 3 there, stands for risk reward, and we've also got insights. Insights, that letter I there in step 3 stand for insights. Insights are insiders information, or we could say information that has actually been gained from proper researching the market for the day. So it is important for me as a mentor, as well as a trader, to know what I'm researching on before I analyze the market. So it's two different things between researching the market as well as analyzing the market, because you need information about whether it's a risk on, risk off environment, things that we listen to from the news, bank reports, for example. We've got top movers, various other things that we can actually gain, and then with that information we get an understanding of the trend, and then from the understanding of the trend we can then proceed to choosing and cherry picking the right pair for the day to actually either draw the setups or decide to actually trade them. Okay, and once we've got all these checklisted right up from step 1 to step 3, we can then go over them and make sure that they all comply, and they've got sort of a clear through checklist that gives us a better sense of understanding the trend. Trend clarity is really, really important. It does actually depend on your trading style, as well as the type of trader that you are. Are you actually a trend trader, or is it the anti-trend moves or setup that you would also ride along? So this does actually depend on yourself, whether you're a scalper, short-term trader, intraday, more a medium term, you leave your trades open for days. Do you have specific type of pairs, in combination with the exotic pairs, or are you more comfortable with just major pairs as well, and things like that, or crosses or exotics, various others. Or do you actually trade gold as well? You know, things like that. So these are all areas that we can always discuss and look into it at a deeper level in a mentorship program type environment. Okay, so let's just see. I think I've just got some questions that have actually popped up. Sorry about that. Yes, there is, Stephen. I'm just going to move on a little swiftly right now. So let's get on with that. Okay, we'll just go on to that. Give me a second. Okay, yes. So from theory to practice, we've talked about price trade plan. So just as a summary, we've got psychology of the market, the P, risk reward, insights, and then we proceed to confirmation, convergence, finding convergence, everything matches, and only then we go on to execution of trading decisions. So when we talked about psychology of the market as well, there are things that we would like to look at things in you know, in bigger picture, from a bigger pictures perspective. So there are four risk themes that are still ongoing at this moment of time for the rest of 2018. I think it would just sip through the fourth quarter of 2018 as well, meaning major news. If you want to keep it really simple, we've got major news, major sort of topics that are at play at this moment of time, and most of the instruments, asset classes are actually impacted by these four themes. And the first one is trade wars and protectionism. So just talking about trade wars itself, as you can see, you know, trade wars, if you separate the words out there, we've got currency wars, we've also got trade wars, and we've just got all these connectivity between countries that would like their currency value and their products to be the cheapest, and that's basically to keep it as simple as that. And with that, reducing their prices and their interest rates and various others would then give an impact of cheaper value of their currencies. And in Forex trading, of course, we've got various ways in our trade setup could actually be set up in such a way to benefit from selling an instrument as well as buying an instrument. So here with trade wars itself, we've just got lots of competition between countries, and lots of competition between countries as well has got gives us the opportunity to combine currencies and trade these currency pairs as well. So at present, of course, this still goes on, friction between the states and its trading partners, mainly China. As you guys can see, we've got daily news coming out about China, about the US, about US and Korea, US and China, US and the European Union, Canada, Mexico. They're all intensifying, and we are actually in the midst of these trade wars as well. But you know, all these chaos, there are ways to filter out information in order for us to look for trading opportunities. So how do we actually turn volatility into opportunity? There are ways to do that only if we are really careful with our steps forward in terms of a trade plan. Okay, so this is your first sort of theme. Your second theme right here are political as well as economical. I've not actually put that there, but political and economical climate in Europe. The European Union itself made up of about 11 countries or so that uses or you know, applies the euro into their monetary system. So they use the euro, and euro itself, you know, it's got a lot of connection with the price movement of gold, and you know, there are ways to actually correlate. Use correlation tables and correlation tools to actually diversify our portfolio. So when we are looking at what impacts the euro as well, with just choosing one pair, there are ways to actually diversify. So I want to talk a little bit about top 10 movers tools that we can actually use on a daily basis in order for us to understand where are the concentration for the day in terms of what asset classes, what currency pairs that are important for us to actually focus on. So we'll go into that as well. And let's just proceed to the third one. Here is what do you call that, policy outlooks, policy decisions by central banks, and mainly the ECB, the European side of it, as well as the Federal Reserve for the States. So when we are looking into pairs, we want to also be sure of what comes out from ECB and Federal Reserve for the day in terms of announcements or even meetings, and as well as interest rate decisions. So hence the reason we want to also look into the economic calendar, not necessarily just based on the results of certain data releases or statistically with percentages of the data and all that. Not really. We just would like to actually be aware of what are the events from the economic perspective that are actually going to be appearing for the day or for the week that could then help us understand the pairs that could actually be in focus for the week or for the day in trading. Okay, so we've got various other things right here, and with that being the third one, we'll move on to the European side of it, as well as the US growth outlook. So there's a lot of data that may actually be impacting these situation, like the GDP, for example, as well as the sales of products, manufacturing, and various other things. So that does actually, communicate loads of information from an economic type data release. So all these ones here, they are important, of course, but there are ways to actually sort of filter out information in a more organized manner, as opposed to reading it through and spending hours or days just to read through and understand the economy. And with that, you would be missing out loads of opportunities during the day. So it has a lot to do with time management and knowledge management as well. I mean, knowledge itself is great, but in trading and within the trading world, knowledge remains a theory if you don't actually apply them. So once you actually have the right type of knowledge and you know how to actually apply it onto your trade plan, then you would turn that into practical type analysis, and hence that's where you would actually see the outcome much better, or the results of your research and analysis. Okay, so there you go, you've got that. Now I just want to talk a little bit about how do we actually start our day in understanding the sentiments of the market, but most importantly to give us an idea of movement of currency pairs that may actually be in focus by the big investors or the traders for the day. Now, this one here is a table. I call it, well, they call it the top 10 movers here on actionforex.com. So actionforex.com is just a site, a website. It's not a broker, but it's got lots of information on there. I don't actually know whether you guys are familiar with that. I wouldn't say that it's the best type tool or website out there that you need to just find all this information from, but it's one of those sites out there that I've been using for quite a number of years, where it just keeps things simple for me in order for me to manage my time as a trader. So what I would like from this top 10 movers is just to give me an idea of currencies that are in focus. So what I mean by that is when we go onto actionforex.com, it's action, ACTION, forex.com. All you need to do is I'll go into that on our second session onwards, whereby we'll go into real time and we go into that tool. But here is where I just want to describe what sort of tools that we can actually use in order to analyze the market better. But this is your first type sort of step that you can actually take, is to understand on the Action Forex. If you go into Action Forex, right at the very top on the left, you'll find the option markets, and when you click onto that, you'll see top movers. And when you click onto that, you've got that table right here, and this table here gives us an idea of currency pairs that are in focus by traders. But what we want in this second column, this first column here with all the currency pairs, is to look at which currency, not pairs, but which currency is mentioned the most from the first place right down to the 10th place right there. So as you can see, we've got NZD right here, another one NZD, we've got some more NZD, some more NZD. So we could easily say sometimes, depending on the time of the market, we might find the whole stretch of that column focuses on just that one currency. So that one currency could then give us an idea that this is where we could actually start off with by paying attention to that currency, not that currency pair, but just that currency first. So let's say we've got NZD mentioned loads of times in there, from 1 to 10, we've got 6 to 7. It doesn't need to be rules, but the thing is that when it comes to the currency that's mentioned the most being paired up with other currencies, of course, and then it appears the most in that list of 10, it could then correlate with what's going on in the market. For example, it may actually be a currency that's been focused a lot, mainly because of the economic calendar as well, their data releases or their news event that concerns that economy or political situation of that country for that currency as well. So it's all tied up in a way. But what we want to do, the first step is just to look at that column right there, look for a single currency that's mentioned the most. Okay, we want to keep it like really simple. And then right here, it gives you a bit of an idea. If you've got negative and positive symbols, now the negative symbol right there, let's say that's for the change area right here in percentage. Now it is negative 1 point something percent right there. It means that the base currency is experiencing some selling sort of preference. So most of the traders would most probably be selling the NZD versus the USD. So here itself, NZD, another negative right there. So they're selling the NZD. For this one here, they are buying the euro. So again, it is selling the NZD there for the number, the seventh one right there. So that is one. But I'm not saying that you just want to go onto your chart and then sell or buy just based on these symbols. No, we're only at the very first step, probably 0.001% of the entire trade plan here. But what we want to do is pick out a currency, keep that in mind, a particular currency that's mentioned the most right there. And another thing to look out for is this time frames right here. You see all these dots here. Now, if you've got all 4 dots right there, like for example, for AUD USD, that actually gives us an idea that we've got that trend strength building up, mainly because it's been posted here as the third place right there, AUD USD, but it's got a sort of steady type trend. Whatever the trend that's going on there, it's actually it could potentially be steady in terms of its trend strength from the 4-hour right down to the monthly chart. So that does actually give us a bit of a hint. Now, I'm not saying that it is a downtrend for the AUD USD all the way through. When it comes to the trend, we will then go on to the charts and believe our eyes and our analysis onto the chart itself, and there are ways to actually do that, and that's where we will go on to the second part in doing a bit of a technical analysis in understanding how do we actually determine trend the right and proper way for various trading instruments. Okay, so here we've gone on to this table right here. Now we'll go on to focusing on that particular currency. Earlier on, we've just picked one pair, and that was let's say USD, for example, that appeared the most, let's say. And if it were to be USD, then you can actually click on a tool that's called currencies at the same website, actionforex.com. It's the same area where you find all the tools. You'll see the word currencies. You click onto that. So we just want to focus on that one currency, and we want to further focus on it. And once you've actually click on USD, you'll get an idea of how much is it moving in comparison to the other currencies. So here, for example, we've got some big numbers right here. The biggest one that you can actually see is at 1 point something, let's say. So this does give us an idea that the USD has moved reasonably or significantly against the NZD. So there may be a reason why did USD move the most against the NZD. It may be political, economical, geopolitical reasons between the two. There's a lot of money transactions between the two currencies as well. So they are paired together, and perhaps we've got clarity of trend onto the charts. If we were to pick the NZD USD, for example, so you can actually easily pick three major pairs right there. But we want to focus on one currency first and then look at the other one and how do we actually match up that currency in the best possible way. So we just want to do a bit of an analysis to understand all these movements of currency. So the next step forward is to look at another tool that's called the volatility chart. So for example, if we have gone on to the first stage, the first step where we got onto the top 10 movers, and let's say, for example, we find that USD appeared the most in that table, then we got to understand that USD may actually be the center of focus or the focal point for the day, mainly due to various reasons in the market or events or various other things. And once we keep that currency in mind, let's say USD, then we go onto the currency tool and look at, just to get a bit of an idea, which other currency that USD is moving most against. And then we go on to the volatility chart. Now the volatility chart right here on Action Forex as well gives us the ability to sort of match make that currency with another currency that could potentially give us an opportunity in the markets to further analyze and then to trade it if at all we find a trade setup for it. Okay, so here, for example, we started off with USD. For example, the top 10 itself, it appeared, let's say, many times over the rest of the other currencies, and then we find that it's moving a lot with certain currencies. And then when we come to the volatility chart, all we need to do is to make the USD with another most volatile currency that is moving with or moving against. Now USD versus the JPY right here. Why the JPY? Because of this edge right here. The sharp edge points out and closest to the JPY based on the daily chart, because that purplish like shade right there gives you an idea that the USD versus the JPY could most probably be the most volatile pair for the day. Now volatility is a lifeblood of Forex trading especially, but it does actually spell out risk as well. So there are various ways for us to sort of cut out the risk level and increase our probability if we know what we're actually doing within the trade plan itself. So here, for example, we got an idea now that USD JPY would be one of the pairs that we can actually look into it and start having our strategies applied on it and follow the trade plan to actually look into even diversifying USD JPY. So USD JPY, this is where we come down to picking USD JPY as a potential pair to trade for the day, but where we could easily diversify USD JPY into many other pairs. What that actually means is if we were to use correlation type tools, it's available on the FP Markets trading platform through Traders H tools as well. We can always go through that practically on the next series, and this would then give us an idea that we could choose various other pairs and do a further analysis on them. Okay, so this is a very simplistic way. Now if it were to be JPY that you have actually chosen, then you could see in the volatility chart itself, JPY would be worthwhile for us to just be curious in combining JPY with CAD, being the most volatile pair for the day, and then you take this pair and open up your chart based on the JPY or the CAD JPY, and we start to do a trend analysis on there and follow the trade plan to actually have a trade setup as well before we decide to really trade it or not. Okay, so there you go. CAD, for example, right here, we've got all this spider web type thing. It's really simple to use. Just follow what's going on at this moment of time. We've got CAD versus JPY to be most volatile. That's how you look at it. And we've also got the economic calendar. Now, the economic calendar itself, we've got low, medium, and high impact news. I mean, I would only filter the economic calendar between medium and high impact. High impact news would have a red bar that's full, and this here halfway through orange bar, that's your medium impact. So I usually ignore the low impact ones and focus more on high impact. You can easily filter the medium to high impact news, whether it's the Forex Factory or FX Street economic calendar. They're all the same source. So what you can then do is just to filter them from medium to high impact, so that you just take the low impact one out, and just to get an idea of which other currencies are actually impacted for the day. So here, for example, we've got a long list of GBPs right here, medium impact news. I'm not really concerned about all these numbers right here, because what I would like to do is to filter out using tools that I've mentioned earlier on, GBP or USD, which appears most on the top 10 movers and which are most volatile as well, could then be reflected by what's going on in the economic calendar as well. So this is how we pick the right sort of pair. So here you can actually see that high impact news are represented by the red bars right here. So here, for example, on Friday, July 20th, this year itself, let's say this is just a sample, an example, where CAD is seen to have the potential to be moved in the market quite a bit, mainly because they have got two high impact news, but then a stretch of other medium impact news. So this does then give the ability for the Canadian dollar to be moved a bit more. But then this may also be reflected onto the tools that we have talked about, whether the volatility tool, the currency tool, or the top 10 movers tool. So this could easily be reflected onto the top 10 movers as well, where most traders are seen to focus on the CAD itself. So all these little elements that I've talked about here onto the tools itself could easily be somewhat like puzzle pieces that we want to put together to give us the big picture of what's going on in the market, in order for us to firstly pick the right pair, diversify it or correlate it with other pairs, and then to bring it onto the charts, onto your technical side of analyzing the market through your platform, your MT4 platform, in order for you to then get your trade setups and everything else. Okay, so there we go. So we've got various things that we've talked about there, and I would like to talk a little bit more about key traits of a successful trader in our next series. Okay, so we want to go through the key traits of a successful trader in order for us to combine our trade plan. Now, it does actually boil down to how you're analyzing the market. How do you approach the market? Do you actually have a trade plan? What's in your trade plan that makes who you are as a trader? Now, how disciplined and patient you are does actually depend. I mean, my experience as a trader as well, over 10 years, it does actually depend on how you're actually approaching the market, what sort of analysis that you actually do. Are you more heavily weighted onto just technicals or just news trading, or do you actually have got a trade setup that's based on balancing the two types of analysis, technical and fundamental? Do you have a standard operating procedure, and does it actually make your brains really busy in order for you to be less busy in your hearts? So all that does then help you to be either more disciplined, patient. Are you adaptable enough with your approaches depending on current market situation? So there are various things that are within your trade plan itself that can then decide to make you stronger, more resilient in the market during tough times especially. Okay, so we will be covering all that much more in more practical manner in applying them into real-time trading as well in our second series onwards. Okay, in the second part of the series onwards. So I think we've got some questions right here. Sorry about that. Let's just okay. Give me a second. Okay, so thank you, Stephen. Okay, brilliant. So that's basically all I have for you guys for today. Of course, we'll continue and speaking about more key traits of successful traders as well, but would like to dig deep into your trader risk profile as well, so that you get an idea of what type profile are you as a trader in the essence, in the perspective of risk, your risk tolerance level as well. Are you defensive, conservative type, risk taker, or trader? And we want to explore a little bit there in order for us to understand ourselves as trader, our trading type, trader style as well, before we tackle the market even further. Okay, so once we understand ourselves a little better, we know how to then trade the market following our trader type and style in order for us to become more resilient in the market. Okay, guys, I think that's all I have for you guys today. And I'd like to firstly and foremost thank you guys for your time in joining me in this first part of this webinar series. And I'll be most happy to welcome you back for the second part. Same time, same channel. I'm so tempted to say same channel, but same time next week, and same day, same time next week. Okay, so with that, I would like to say a big thank you. And if not for any more questions from you guys, I'll be happy to end this session for today. But just a very last thing is to ask whether you guys have got any questions. Everything good so far? Thank you, Michael. Appreciate that. Good. And if no more questions, I would like to just say a big thank you to you guys, and I'd like to see you guys again for the second part. And if you guys have got any questions at all about what we talked about today, kindly email to support@fpmarkets.com. Be very happy to help. Okay, guys, take care. Have a good night, a good day ahead, and happy pipping. Take care, guys. Bye-bye.